You're on outside the Beltway. I'm John Fredericks, and I'm your blowtorch, your free speech in America. Well, let's get to the markets and the economy. Joining us now, the one and only Mark Livingstone, mortgage expert. By the way, he's been telling us about the economy and mortgages and interest rates on my radio show for the last 11 years, and he's with us now. Mark, great to have you. Let me just start with, there's so much going on right now in the market. Fed raises rates last month. Jerome Powell did by 0.25%. Inflation getting worse since he's done that, actually. It's gone up from 8.5%. It's going to go up to about 10.5%. No doubt that Powell in the next 6 weeks, when the next meeting comes for the quarter, is got to go to a half. He's got to go to 50 basis points increase and then go from there. They got to do something to stem this inflation because God knows the administration isn't. So, having said that, what does it look like now with another pretty substantial interest rate coming down the pike?
Well, good afternoon, John, to you and all your viewers. Great to be here in the nation's capital. You're absolutely right. Chairman Powell did raise rates at the last meeting by 0.25 point, and it's all but done that he's going to raise interest rates at the May 4th meeting by 0.5 point. But that's not the breaking news of the day. The breaking news of the day, John, is that they're saying that he's going to raise interest rates by 0.75 point at the June and July meetings, okay? We started the year with interest rates down around 3.25%, and Chairman Powell raising these rates is impacting the mortgage market by interest rates climbing at the largest increase in the shortest amount of time since 1994. So we started the year at 3.25% on a 30-year fixed rate. We are right now hovering just above 5% on a 30-year fixed rate. That is, again, the largest increase that we've seen in years. And at 5%, we're looking at rates that we haven't seen in 12 years, with the likelihood, probability 95%, that rates will be at 6% by the end of this year. That's just, that's the largest increase that I have seen since I've been in the mortgage arena.
Well, you got to go back to Jimmy Carter and the misery index for this back in the 70s to get this kind of an increase in this short period of time. So what does this mean for the housing market? I mean, if you're trying to buy a home right now, you're a young family, you want to get out of renting, you want to buy a house, you get a new job, the American dream, what happens? How does this affect the market?
Unfortunately, the people that are being hurt the worst by this, John, is the millennials. They're the ones that are coming off the sidelines right now to buy houses. We have 80 million millennials that are coming off the sidelines that were holding off because of the real estate implosion of 2008, 2009. And the reason for that recession was due to speculation as well as shoddy lending, requirements. Now, I don't think we're in for any recession, but we are seeing these rates going up, and that is detrimental to the millennials coming off the sidelines because we're seeing increase in rates, we're seeing increase in property values, and if they decide to rent, we're seeing increases in rent also. And let's break it down for your viewers real quick, what these increases in rates, mortgage rates, means. The typical loan size in the United States is $350,000. If somebody had refinanced a $350,000 loan, John, in the beginning of January and then was to do it today at 5%, we're talking an additional $375 a month, okay? And that is just taking money out of their pockets. And so that diminishes the borrowing power that these home buyers have. When they might have qualified for a $400,000 loan, now they may only qualify for a $340,000 loan. So the house sizes are going to be a lot lower because the interest rates are going up with no sign of slowing down.
Well, the other problem here, Mark, is that the supply, as you pointed out earlier today, the supply of houses have diminished because, number one, the cost of goods sold is getting higher, manufacturing goods are getting higher, lumber's getting higher, labor's getting higher, so everything is going up. So you have this demand that's way outpacing supply, and so that doesn't that further just exacerbate the whole situation?
Exactly. So last time I was on your show a month ago, the typical time of a home on the market was 2 to 3 weeks. Now let's break this down, because in a healthy environment, the typical time of a home on the market is going to be 4 to 5 months. And 1 month ago, it was 2 to 3 weeks. That's crazy. But here's the thing, is since the Fed raised the interest rates by 25 basis points, that time has slowed down to 5 to 6 weeks is the average time on the market. So if you see, it's actually trickling down a little bit, that what the interest rate increases is doing is slowing down. It's taking some of the people out of the market. So we're not seeing the massive amounts of contracts coming on every single listing. We speak to real estate agents every single day, and they're letting us know that, yes, there's not as many contracts coming in. There's not as many escalation clauses. So while this report, John, to your viewers may seem all gloom and doom, it's really not. There's some great news. The great news is that, hey, interest rates are still low by historical standards, but they are going up. And the great news is that, there is still inventory out there, albeit very tight. But right now, there was 1.6 million housing start contracts, okay, that are going through the system right now. So like you just said, builders are picking up, and there's roughly 972,000 homes for sale right now. Again, that's a very small inventory. It sounds a lot bigger than it is, because when you have 972,000 homes for sale across the country, and you have well over 1.5 million people looking for homes, that's where the housing is going to get sticky.
So what does this do to the rental market? I mean, people that obviously you have to live somewhere, so you can't buy a house. Rates are going up, can't afford it, and nobody wants to. People are concerned about paying 6%, although they should get it now because it's only going to go higher. We'll get to that in a minute. But those that are renting, what is this going to do to rents?
That's a great question, John, because right now we've seen year over year in specific cities. For example, right here in Washington, D.C., where I am right now, rents went up year over year by 20%. And in some of the housing markets where it's really hot right now, down in Florida or out in the Midwest, parts of Texas, you're seeing rents go up by double digits, 20 to 40%. And so what this is doing, again, is pushing people to pay more in rent. And so that pushes them to go get a home, and then they don't qualify because what they qualify for is a lot less than it was a year ago. So rental right now for the landlords, it's a hot market. For the renters, not so hot.
Right. So it's definitely, rates are going up, interest rates are going up, so people are kind of stuck in the middle, right? You got to do one or the other. You got to pay out the nose either way. But look, your company I know is fighting back a little bit, trying to help people. You got a hometown hero program to help people that are trying to get into the market. How's that work, Mark?
Well, John, as a volunteer firefighter myself, serving right up the street in good old Rockville, Maryland, every Monday night, we see that a lot of these first responders are underserved. So our company offers the Hometown Heroes product. And what that does is it gives back to those individuals that are making a difference in the community, from firefighters, police officers, nurses, doctors, teachers, and especially veterans. Right now there's 18 million veterans here in the United States. There's 250,000 veterans that are switching from serving to civilian life every single year. And while the veteran may be taught in the military discipline and respect, the military is not teaching about mortgages. And you wouldn't believe how many veterans I speak to that have no idea what's going on with the veteran loans. Most veterans don't even realize that they can get into a home with zero money down. Most veterans don't realize that once they have the loan, they can refinance out up to 100% of the value of their home. So the Hometown Heroes is the opportunity that my company and I look for to give back to these hometown heroes. Again, the teachers, the firefighters, those that give to the community, we want to give back by giving great discounts in closing costs. We're also affiliated with a real estate company that's licensed throughout the country, and those real estate agents offer the Hometown Hero program that they give a nice size portion of their commission back towards the closing cost for that Hometown Hero.
Now, you guys are also, you're in 41 states, but you're also at the cutting edge of all the VA, different type of VA loans. So if somebody's a veteran out there, they're thinking about refi, they're thinking about buying a house. What makes your company so unique in that realm?
Well, what makes the company so unique, John, is just the application to closing service that we provide, the ultra low interest rates. And again, it's white glove concierge service and the most products. And just like the Hometown Heroes, the veterans, we really want to reach out to those veterans and say thank you for your service to our country. we're all cut from the same cloth. The viewers here on your station and those working in my office, and we want to give back. So the veterans are allowed to get up to 100% of the value of their home, cash out refinance. And right now, we've seen $1 trillion more in consumer debt from this time a year ago. John, I don't know about you, but definitely I'm feeling it at the gas pumps, in the grocery aisles. This inflation at 8.5% and predicted to be at 10% by the end of this summer. It hurts. It hurts the belt of all us Americans. So therefore, a lot of people don't know what to do and don't realize that they're sitting on this gold mine of an opportunity to take cash out to pay off their consumer debt, maybe to pay off the student loans, but to wrap it all in and potentially make it tax deductible. The interest on a mortgage is tax deductible. And so the veterans have the opportunity to go up to 100% of the value of their home.
Well, your company has saved my listeners tens and tens of millions of dollars over 11 years. And you basically say, hey, if I can give people a lower rate and give them great service, they're going to come to me. Mark Livingstone, thank you. Mark, give him a call, 888-417-2921, 888-417-2921. Go to cornerstonefirst.com, cornerstonefirst.com.